On the program of CFI development, I just wanted to reiterate a little bit that we started that on the recognition that CFIs are very important in terms of financial inclusion, also rural finance, but quite often they have not lived up yet to their potential. In 2015, we were inspired by a situation in Albania where Rabo was working together with the SACCO network, and World Bank was working together with the Central Bank of Albania on the cooperative law, where we actually created a dynamic environment where regulators, sectors, as well as World Bank and Rabo came together in mapping out a new strategy for the sector and an enabling environment to match that. Fedinvest is the consolidated result of that effort, and the chair lady, Ms. Sanna Conini, was represented in panel 1 of our symposium, and the institution is doing very well, contributing a lot to rural finance in Albania. And that made us think, can we replicate this? Can we do this in other markets? And we got support from the Netherlands Ministry of Foreign Trade and Development Cooperation, as well as Rabo Foundation. And we're very proud that the MD of Rabo Foundation will have some closing remarks for us later today. And we set up a joint program which basically had two big ambitions. One was to replicate the example from Albania in different markets. And currently we are working in countries as Colombia, Ethiopia, and West Africa. And we are very happy to have partners from these countries in our panel today. And we set up a Center of Excellence, which is basically hosting this symposium, housed within World Bank, with the idea to really promote professional discussions, create a network of institutions from regulators, from supervisors, the sector, promotion agencies, development finance experts, and to come together to really help promotion of the sector going forward, and support in that respect also financial inclusion, food security, private sector development. This symposium has already seen that the Center of Excellence is becoming bigger, and we just had a meeting on how we can actually mainstream the Center of Excellence a bit more. And I think this symposium has been very important, that other parties than Rabo and World Bank have been invited into co-organizing the symposium, and take a bit of ownership in that sense for the success of the Center of Excellence. And that has led to very interesting and rich discussions in the various panel sessions. And I would like to thank Woku, Desjardins International, ICERN, and also other parties that have contributed there for really contributing to that success. On the content, I would like to give the word to Carlos Cuevas. These closing sessions, we would like to also disseminate and give the knowledge that we have gathered within these sessions, share also what came out of that. And Carlos is a senior consultant within the World Bank Group. He used to be a faculty member at the University of Washington, has worked for over 15 years with World Bank, and he has also played a moderating role in one of the panels. Carlos, over to you, please.
Thank you, Bjorn. And you already highlighted the unique nature of this symposium, in that we work with these terrific partners that basically put together the different panels, and that's not a very common occurrence. And I guess I just want to recognize that as well. I think we have had a similar event. The first one was back in 2007. I was still at the bank at the time, and this time, and 3 years ago, we had a similar. We were missing one of the partners, I think, at that time. This time, it was really refreshing to see, well, relatively new faces, younger faces, to put it that way, across all the partners or organizations, and definitely more diverse and inclusive than previous gatherings. And I'll go over, if I have time, on what diverse and inclusive means with a quote from one of our panelists. So we gathered practitioners, regulators and supervisors, development policy experts, industry leaders, high-level expertise in development generally, but particularly in cooperative finances, with terrific attendance and great participation. And again, the leadership of our partners was essential to get this accomplished successfully. The next one, please. So I'll go over the outcomes and cross-cutting themes to the extent possible. There's a couple of sessions that were cross-cutting themes, but also there were specific panels on regulation, supervision, and women and youth. But let's start with cross-cutting themes that in all 5 technical panels came up, beginning with the nature of CFIs. Why are they different and why are they important? And why they are unique players in expanding rural access to financial services. And I guess what was highlighted was the principle, the critical values of trust and confidence that can define cooperative financial institutions. And that is not a given. It involves ensuring that governance is sound and solid, financial management is sound and solid, so they are inspiring trust and confidence in their communities and therefore attract members and do their business in a sustainable way. Resilience was something that also was mentioned in the face of crisis. The CFIs are hanging there, so to speak, when crises come in, and not only in the fragile countries, but also in the recent or still ongoing pandemic scenario. They have been clearly able to continue doing their work when other entities leave the communities. Client-centric, that's a term I think Mathieu is in the meeting today. He brought it in the opening session, in that it involves adapting products, adjusting terms to the diverse client profiles. That was something that came up also in the women and youth panel as really important features that CFIs have and or need to improve upon. And they are, in a nutshell, central to improving financial inclusion in rural areas because of their specific nature. Second cross-cutting theme was digitization and information systems. That came up in practically every panel. Digital tools is a priority, and it is a priority because they support a number of different aspects of CFI's work. Governance, for example, I think Dave and Matthias had an interesting slide with how many virtual meetings are being held this year compared to previous years because of the pandemic, and this governance has been possible in large part because virtual meetings are possible. And the trouble then is when those when they're limited because of infrastructure and so forth, then it is a matter of concern. In operations, of course, their digital tools are critical to expand outreach, provide all kinds of services beyond payments, financing agriculture, and information platforms are critical to have functioning in the proper way. In supervision, digital tools are also really important, especially when it comes to supervising many small CFIs, because it involves doing a lot of off-site supervision, and that's enabled by digital tools to be done in a prompt and efficient way. Issues in digitalization, and it was discussed in many in many sessions, in particularly the panel 5 on financing agriculture, infrastructure, interoperability. Daniel Huba mentioned that really clearly. Those are things that are still lagging in many countries. And even if mobile systems expand, we know that in rural areas that's not as widespread in many countries as it should be. Question came up and also in several panels about what about fintechs, and are they disruptors or allies? And I think it was Elenita from ACCU who discussed that, and CFIs respond in different ways, and that's an important thing to consider. Some of them create kind of competing platforms, as was the case in the Philippines, but others resort to basically join, partner with fintechs, and we saw a couple of examples of in Latin America that are following that approach. Instead of trying to fight the fintechs, it's trying to create some synergies with them. Matthew brought this thing about preserving the cooperative spirit in the principle of solidarity when digitization comes in, because it tends to create individualistic tendencies, as he put it. The other issue is protecting clients' information and assets, and that was again brought up in the Desjardins panel 2 and others. Next, please. Access to capital, again, very important topic, came up in different panels, and of course the traditional way cooperative financial institutions systems handle that is with central financing facilities, which are not automatic. They need to be created and put together in a professional way, but many systems have those. The question was, well, when it happens that even that is not sufficient to meet demand, and that is a question that came up both in the Desjardins meeting, but also in the one on ag finance that we had yesterday. How do we make outside capital come in consistent with cooperative governance? So when people are concerned about sacrificing, let's say, member control of the organization when outside capital comes in. That was an important thing to consider. What kind of instruments are appropriate for CFIs? There was the example in Peru of subordinated debt that was provided by the Inter-American Development Bank and also by Desjardins as a way of capitalizing the CFI in a sustainable way, emphasizing sound financial management as opposed to putting conditions on governance. And what kind of investors align with the cooperative model? And that's part of the discussion in a couple of sessions. Then regulation and supervision came up practically in all panels, and we had a specific panel led by David Grace and Matthias Artsbach, ICERN and DGRD, on regulation and supervision. Great discussion and lots of interesting points. We discussed proportional regulation. They had an interesting display of the principles versus the practice. The principles such as proportional regulation, safety nets, and so forth. In practice, how much of that is achieved? And I guess implementation of proportional regulation is not easy. It's hard to implement in practice, but that's the direction. And what I was really happy to hear in the panel was the focus on compliance. I think Margarita Hernandez from the superintendency in Ecuador brought that up, and that, in my experience with CFIs is rarely highlighted, and in my opinion, in the opinion of many, it is a critical measure of the effectiveness of supervision. Regulatory systems and supervision mechanisms can be very nicely defined, but the proof of their effectiveness is compliance with existing standards, and that's something I think was brought up, and it's important. Challenges, many in regulation and supervision, and particularly in part because of the large diversity of CFI systems, from highly integrated, such as the example of Albania that Bjorn brought up, and we can add Brazil, Credit to that, and others, to highly atomized and with large numbers of small CFIs. The examples came up for Ethiopia. Berane put it, many tiny circles would not do. That's what Berane Kidano from ATA Ethiopia said. Well, yeah, it is. There are 20,000 in Ethiopia, and that's really tough to deal with in terms of supervising. Uganda doesn't have as many, but still several thousands of them, and that's a clear challenge. Balancing the protection of member deposits versus the regulatory burden, meaning the cost of both enforcement and compliance. And so that's a critical balance that people designing the system need to keep in mind. There are related to the scale issue, and this came up also in the Ecuador discussion, categorizing CFIs by their size, scale, given assets or membership. And again, that's the technical question there, and adapting regulations to be internally in a system proportional to the scale. So for the example was given was you give a longer deadline to smaller entities to comply, and or make the standards for them a little less strict. And that's again a question that has to go back to how strict it needs to be to make them sound and inspire confidence as they should. Integration was part of the mechanism that was discussed. The risk of cannibalism, as someone put it, of the really large one absorbing small ones. And the other challenge that was brought up was financing the supervisory agency. And again, in that panel, David and Matthias brought an interesting contrast between the large members of ICARN, the G20 members, versus the non-G20 members, and in terms of the way the supervisory mechanisms are funded. And I guess the idea was to move from primarily government funded, which is typical of the non-G20 countries, to self-sufficient in the sense that the supervisees are funding the entity that does the supervision. The next one, please. Incorporating CFIs into the financial system, that's the way I sort of could summarize that, because in addition to the supervision and regulation challenges to make CFIs a credible and solid part of the financial system of a country, there are a number of operational and functional elements that are important. Critical, and there was consensus on this, access to the payment system. It's a clear difference between those countries in which the CFIs do have direct access to the payment system and those countries that do not have it, and that we don't have a full census of that. It goes back to getting the right kind of statistics on the sector, but that's a critical element of making them reliable and competitive in the financial sector. In many countries, in most countries that at least I know, they are dependent on the banking system to be able to access the payment system, and that's kind of logical difficulty, so to speak. Agent banking and other innovations are helping break that challenge. But again, it's even when those mechanisms are part of the what CFIs can do, not necessarily don't necessarily benefit from it or take advantage of it as fast as other financial institutions do, and that's something that I think Mario V was mentioning yesterday in Colombia, that the option to do that is there, but CFIs are kind of slow to adopt. Connecting with sustainable food chains, green finance, that was mentioned, is again part of the operational elements and functional elements that would qualify CFIs as true financial system participants. Inclusion of women and minorities in rural enterprises. So it's a point that the ID brought up. So it's if the rural enterprises are inclusive of women and minorities, then that brings them into these groups into the formal financial system, and that's something to keep in mind in putting together operational systems. Managing risk. Yesterday, Gerardo from the Yadam brought that up, and role that integration and diversifying exposure play into doing that. And again, it's connected with the overall kind of structured discussion of integrating small entities into larger, more functional organizations. And the final cross-cutting theme, women and youth. And again, there was a particular panel, really interesting panel on that on Tuesday. And but in many other panels, speakers emphasize the inclusion of women and youth in CFI. Remoteness generates barriers for rural women and youth because of transportation costs, transaction costs, which is a favorite term for me, time barriers, financial literacy. Those are all challenges that need to be addressed when dealing with women and young people. Capacity building, leadership development, really emphasize leadership development that goes beyond financial literacy. The panel organized by the World Council had these leaders, both women and youth committees in the Brazilian system, in Credit, and that was a real interesting discussion. Diatou Coulibaly from Senegal brought this issue of real inclusion with women as member owners and in management and governance roles. So that's where you can, that's when you can actually measure the success in reaching those groups. Women and young leaders need space. That was a term that came up several times in that panel. And one thing that actually Marianne Humacher mentioned in the opening session, attention to youth is what someone said is the future and present, is the future of CFI membership important. It's rejuvenating, as John put it, the membership of CFIs. And the young leader in Brazil said, well, it is also the present, at least in their system, but clearly it's part of the future. And I don't know how I'm doing on time, but I am almost there. I just wanted to mention this, one of my favorite quotes that came up in the meeting when when Yvette Schoffen of Security Alliance of Women made the distinction between diversity and inclusion. And she said, well, diversity is when you invite me to a party. Inclusion is when you ask me to dance. And that, I thought it was a terrific way of showing, of describing the difference. Next one, please, that's the last one. So the way forward, and here I'm using 3 quotes from different participants and one that I took the liberty of doing it, adding it myself. First, from Zana Konini, chairwoman of FedInvest Albania, the entity that Bjorn mentioned. It's a long sentence, but it summarizes pretty much everything that's important. We cannot maximize the value to our members, which is an objective of CFI. Impact to community, another important goal, without achieving a sustainable growth that means solid capital base, strong efficiency, and profitability by using smart technology. So that kind of, I thought the key words that one could come up with from the entire symposium. Creating favorable conditions for women and youth participation. It is more work, but it is worth it. That was Manfred Dassenbrock, I'm not sure if I'm pronouncing that right, from Central Security, Brazil. So in that, it's not the only time that being more difficult doesn't make it impossible or not worth doing. And this creating those conditions for women and youth is more work, but it's worth it. Then Maximiliano said it in Spanish, somos todos actores de cambio. It's kind of the optimistic, forward-looking flavor that at least I collected from being in all the, we are all agents of change. And that's Maximiliano Sainz from the Japan. And what I added is, just because going back to my favorite subject, is solve the regulation and supervision challenges. It is doable. And the reason I wanted to add that is because the Albania example and others, Brazil, Mexico, and others that are upcoming, Kenya, and others, show that it's not an impossible task. And they say, I guess it's again one worthy conclusion of the symposium in terms of what's next. Thank you, Bjorn, and everyone for the patience. I hope I didn't extend too much.
Thank you very much, Carlos. It was very interesting, and yes, you did extend a little bit, but I believe a closing session is also for actually recapping the most important points. And yeah, there was a lot of ground to cover. So excellently done. Thank you so much. I saw that also Dave Grace commented in the chat box on the importance of the financial infrastructure access, whether it's payment systems or deposit insurance, and basically putting in the statement that if CFIs can mobilize deposits, they should be allowed to access also the financial infrastructure. I think that's a very important point because it enables CFIs actually also to increase their service capabilities towards clients. And a cooperative is, of course, an institution that basically brings members together to provide a lot of services to those members. And many members will also have access to payment services as one of their biggest needs. And so if CFIs should be meaningful institutions, these kinds of things should be organized. At the same time, I think Carlos came upon the complexity of financial services nowadays with risk management, with compliance, etc. So it would be nice to understand also how regulators look upon that part, because you also have the consumer interest at heart and have to protect that. And I would like to give the word to Maralfi Bernal, Intendente Delegatora de la Actividad Financiera del Cooperativismo de la Super Solidaria in Colombia. Maralfi Mayolfi is finance specialist and economist by education. Has a lot of background in that. She worked in the private sector at several financial institutions. For long, she has worked with the CFI network, amongst others, to implement IFRS for CFIs. Thank you so much, Mayolfi, for joining us. You are one of the partners that we work with in the countries of operation, Colombia. You're working closely with World Bank. Could you maybe provide a small introduction on how the sector is operating in Colombia to give the audience a bit of a look and feel on how the CFI sector in Colombia is organized, and reflect on your cooperation with the World Bank in the coming years, and what are the main issues and challenges you would like to address? Over to you.
Muchísimas gracias.
Thank you so much. Good morning in Colombia, and good afternoon for those of you who are in different continents. On behalf of the Solidarity Economy Superintendency, I'd like to thank you for inviting me to be part of this important symposium, which has left us with so many lessons learned. I'll explain briefly what we see at our sector through surveillance with figures, to then move on to what we consider to be the challenges in the sector and the steps to be taken as superintendency, but also so as to encourage the development of our organizations. Based on our analysis of the sector in the last 5 years, we see that the 177 credit institutions and savings institutions we survey have grown about 8.5% with regards to assets. In September, these assets reached 18 trillion pesos. This is about $4.5 million, and this has been concentrated mostly on the loan portfolio. Before the pandemic, growth was higher. We could see a higher growth, 8.5, higher than that. Because of the pandemic, there was lower placement. The uncertainty of the pandemic led our institutions. First of all, members were not requesting loans, and organizations were not actually placing loans. Also, they were trying to build liquidity buffers. Because of the level of uncertainty, they were thinking about massive withdrawals of their members if the economic crisis required so. What we saw last year was that organizations were able to maintain high levels of liquidity. However, credits continued to be provided at lower rates, but they continued. In the case of deposits, we saw that deposits are the main source of funding of these organizations. Well, they had a much higher level of growth compared to the situation prior to the pandemic. In 2020, we saw quite a significant increase in deposits, rates that are much higher than the portfolio growth. And as I was saying, this created excess liquidity in the entities. If we talk about our 177 credit and savings unions in our country, we welcome the fact that these 177 unions are throughout the country. The country has 32 departments. This is the way in which the country is divided by regions, and we have a credit and savings union in each of these departments, or at least an office. They have 917 offices with 347 correspondent agents, and they provide services to 3.4 million members of these organizations. We also see that 46% of these entities provide services in the main cities. These would be urban areas in the departments, and 54% provide services in smallest areas of the departments, which in Colombia we call municipalities. This shows that we have a market and that these organizations have quite a broad market, which is being satisfied. And we see a balance between the supply of services in rural and urban areas. At the superintendency, we have completed a project called Social Balance and Benefit. This has been such an interesting project. We were able to measure the solidarity and real benefit that members receive. We are not measuring this through the excess. Usually what is used is profitability measures, but instead of that, we are measuring the benefits that members receive, benefits of a social nature, improvements in their quality of life, their participation in these organizations, also benefits provided to the community at large, also benefits for the environment. This has to do with so much more than what we normally look at. And it has been such an interesting exercise. It allowed us to capture information about the different entities that we can use not only for statistics, but also for public policy. Allow me to mention a couple of things that have to do with what was discussed during the symposium. We have concluded that savings and credit unions provide financial services in 53% to women and to 47% to men. This shows that our cooperatives, the ones we supervise, have a focused policy to reach women. They are providing financial services to a 45% to people between 35 and 60 years of age. We also see that they are providing services to a lower extent to people between 25 and 35 years of age. There's a lot to do in that regards. We see the levels of members that are located in urban areas. We see that cities have these unions and 24% are found in rural areas. This is something that cooperatives will have to work on because we are very clear on the fact that these organizations are the ones that can be used to close the financial gap aimed at inclusion in the country. On the side of revenues, they provide services to 62% to population that have a salary of about 4 minimum salaries per month.
All these figures for the sector that we have shown, which were not affected by the pandemic, and we were able to maintain the sector, and they were all very positive. All that we have done for the benefit of the associates has been very positive. But we, as a superintendency, have analyzed some data which we can also share with the financial superintendent's office, because our cooperatives clearly compete with traditional financial institutions. And what have we gathered from this? From the 3.5 million customers of our cooperatives, out of those associates, only 913,000 have credit products with these entities. The other 2.2 million associates approximately do not receive these services. So there's a lot to do in that area. Not all associates are as active as they could be. And those 3.3 million associates, which are receiving services from the 177 supervised SACOs, 1.2 million do have loans with the financial institutions. So that made us think and ask ourselves what is happening. Something is avoiding associates from getting services from these cooperatives, which are much more willing to provide these services. They're closer to the customer, even geographically, but we are not satisfying the needs of these associates. So, in line with the themes of the discussion of the symposium in the last few days, what we have seen is that we need to broaden coverage and see what elements are missing in these organizations to satisfy the requirements of the associates. The World Bank has supported us in a very interesting way. We performed an analysis for, in the case of correspondent bankies, we ask ourselves why these channels and these services have not been used in to a higher degree. And there were meetings with organizations, with the unions and all interested stakeholders, even with technological operators, and we saw that there's a high informality that must be tackled. There is a culture against change in several organizations. They resist change a great deal. There's a lack of interest in using the new technologies, fintech services, and other alternatives that are present already in the markets. And maybe our entities are a bit behind in this area, in these new scenarios. Many entities also said that they had difficulties when it comes to connectivity. In Colombia, there are certain deficiencies in internet connectivity and also in the field of security and safety. So all these factors led us to think that there are significant challenges in our operations, and we are continuing to work with the World Bank. The superintendency is trying to give these organizations tools to comply with the regulatory framework. The World Bank has given us a series of tools that we're going to include in our framework. We have some rules that make organizations be more confident and more willing to trust their clients. And of course, as a superintendency, we will try to improve our supervisory tools. This has been the type of support we have received from the World Bank, and I would like to thank them for this. There are many other elements that need more work, but undoubtedly, these are the results that we are observing now in our supervised sector in Colombia. I don't know if I exceeded the time allotted, but thank you very much for your attention.
Thank you so much, Maelvi. Much appreciated and a very interesting insight. For the sake of time, I will continue very quickly. I would like to go to Mathieu Soglonu. He is the Managing Director of the Confédération des Institutions Financières d'Afrique de l'Ouest, CIF. CIF is a multi-country confederation operating in 5 countries with 6 national apex bodies. And Mathieu has over 20 years of experience in international development. Mathieu, you have been in the opening session, so we have been informed a bit on the network. Can you also reflect on the upcoming work that you will undertake with World Bank as well as Rabo? And can I kindly request you to keep a bit to the time because we're running out. Thank you.
Okay. Merci beaucoup,
Thank you so much for the opportunity that you have offered us in the Confederation to participate in this closing session for this very important symposium. We're very happy to have been involved in the symposium, which enabled us to celebrate the excellence and hope represented by the cooperative movement. We, through communication, have learned that financial cooperatives are flexible, inclusive, and resilient organizations. We learned that CFIs have certain strategies to work on inclusion, economic inclusion, inclusion of women and youth. We learned that CFIs are excellent vectors for financing small producers and for the rural zones in general. We learned that CFIs are instruments for rural development and for small savings, and that CFIs efficiently support ecological transitions. Our organization, CIF, is extremely pleased to have participated in the symposium so that once it's done, we can work on the challenges, which are important challenges for financial cooperatives in West Africa. I would like to list a few important challenges that we face as cooperatives in West Africa and which really need a coalition and partnership to be overcome. First of all, there's the technological aspect of digital transformation. Cooperatives in West Africa have advanced a great deal, but this was done in a context of traditional management, and now there is some catching up to do with technology, and this requires a quick digital transformation. The second challenge has to do with reconfiguring the system to be more efficient, reduce the decision centers, bring services closer to members, and this will lead to improving the services offered by cooperatives and greater social responsibility. In terms of challenges, it would not be too superfluous to say that we need a more agile governance to strengthen the leadership of women and youth in decision making. And finally, our authorities must work on more empowering policies. With these challenges, our partnership, the partnership that really gives us structure, seems really essential. And we as a confederation are very pleased with this partnership with the World Bank, with Rabo partnership, with the African Development Bank, with the IBD, with Tagra, and many others, to be able to contribute to transforming financial cooperatives in West Africa. And that is why I call for a coalition to support financial cooperatives in West Africa, given the security crisis that the Sahel is going through, the health crisis, and the weather and climatic crisis that we have just learned so much about at COP26. The environment today is much more competitive, and technology has become increasingly powerful. Our farmers have worked with financial cooperatives in West Africa and in the world. Now we need to work so that these financial cooperatives become sustainable. I would like to really congratulate the Centers for Excellence of the World Bank, Rabo Partnership, and all partners for this excellent symposium. And I am hopeful that the partnership that you have just announced will be beneficial for CFIs in West Africa. Really long live CFIs. Thank you so much.
Thank you very much, Mathieu, and it's a pleasure having you again here. I think you made excellent contributions throughout, and we're really looking forward in working with you. And I think it's a very unique structure. Sometimes we have these atomized CFIs that basically you are aiming to really have a network across countries in place, and where you try to address a number of these issues for the entire network from a multi-country perspective. And that's quite impressive, and we look forward to working with you on all the accounts you mentioned. I'm just checking whether our speaker, our invited panelist, Usman Siraj from Ethiopia, is in the call. He's been going in and out, maybe due to technical reasons. And since that doesn't seem to be the case, I think we're going to move to Pim Mol. Pim Mol is the managing director of Rabo Foundation, and he has been working for Rabobank for almost 15 years now. He's active. Rabo Foundation is active as an impact financier in 23 countries and focuses on impact, social, and economic, social, and ecological impact. So that's called the Impact 3. Pim has a cum laude master degree in macroeconomics from the University in Amsterdam and has a long career in banking. And as I mentioned earlier, Rabo Foundation is a huge contributor to our joint program, not only in terms of supporting us, but also in terms of the network they operate in for 30 years of work that Rabo Foundation has been doing in emerging markets. Many of that also related to cooperative development building. So Pim, I would like to give the closing words to you.
Thank you, Björn. On behalf of Rabo Foundation, I'm proud and honored to be here to make the concluding statements. First of all, I'm very impressed by what Carlos showed this afternoon, this morning, this evening, of all the work you've done over the last 9 days. A big compliment to all of you. It's an incredible harvest of all your ideas. And also a big compliment to Carlos and his colleagues of the World Bank and to the colleagues of Rabo Partnerships. Let's first take one step back. We also organized a Center of Excellence seminar in the same way 6 to 8 months ago on COVID-19 and the impact on CFIs. On the one hand, we have the very horrible impact, of course. We're still, many of us, in the midst of that. On the other hand, we saw in the seminar that there is a flux of new ideas, new products, new services, new digitalization, new innovation, the steps regulators take, which is incredible. And that's also shown in the wealth of ideas you've come up with over the last 9 days. 2 remarks and 3 ideas. The first one is, in fact, the last one Carlos made, women and youth. Marianne mentioned it in her opening statement. It's incredibly important. We have existing clients, but we have to also see for our continuity to new clients. Women and youth are crucial in that respect. And what is very important, that many financiers like us have special programs for you, for many of you, to have financing schemes for especially this target group. Carlos mentioned it's a lot of extra work sometimes, but there is also recognition that because of that hard work, you get easier credit finance from parties like us. That's one observation. The second one, and that's also what came up in all your statements this week, is compliance. One point that was not mentioned is the compliance on our side while financing you. 3 years ago, compliance on our side, when we wanted to finance you, was 1% of our cost and 1% of our time. Today, at present, it's 10% of our cost and 10% of our time before we can finance you and take that step. There has been an incredible surge in regulation for the likes of us, compliance-wise, and that's CDD, customer due diligence, before we can finance you. That's a very important thing to take into account in the overall theme of compliance. Three reflections on what I've heard. And that's mainly from our experience as Rabo Foundation while being active in nearly 25 countries, while Björn mentioned. And it's on a theme that Matthew also mentioned. The first one is sustainable loans. We provide finance to a MFI in Ecuador who has a special program for loans for organic produce. As this also has a risk component, the interest rate on organic loans is lower than normal loans because the risk for organic produce in our climate change society, in our climate change world, is less and hence lower interest rates. That's something to take into account. A second observation is digitalization. We just sent out a team of people from the bank working together with Rabo Foundation to Nicaragua. And we helped the CFI over there looking at all the data regarding risk. So what we introduced was one account manager on 150 clients before we came. And after we worked together on the risk metrics with the CFI, it could be one account manager on 250 clients. So more finance, broader finance, quicker finance, and in a better risk return way as well. And then my final observation, that's also on risk, but especially on putting risk parameters with finances like us together. If you combine development capital, public capital, and private capital together in order to finance you, you can have a major leverage. We did a deal recently with USAID, with DFC, and with our colleagues of IKEA Foundation and Shell Foundation, together with 4 private parties, private financiers in India. And we, due to the leverage, can now, in a period of 8 years, finance 55 million and reach 220,000 farmers, mainly women, in a way where we focus on climate smart financing and less waste. And that's what we call, and Björn mentioned it already, impact to the power 3. Let me conclude with the statement that you just heard by Carlos as well, so I repeat it. I think that you've shown that we can ask more people to the party and let's invite everybody to dance as well. Thank you very much. And this was a concluding statement, but it's in fact an opening statement on the wealth of information that's brought up and the proceeding phases to introduce and to implement that. Thank you very much. Björn,
Thank
over
you
to
very much, Pim. And maybe before officially closing, I would like to thank all the speakers of today, Pim, Mathieu, Marovi, Carlos, of course, but also all the partners that contributed to the symposium overall, and of course the team that has put so much effort in terms of organizing the symposium. That has been a lot of work. So maybe you can also put all your cameras on and that we can see you on screen. I'm just mentioning a few names: Toshi and Carlos, Jose, Juan, Ruby, and many others, also on the technical side. Thank you so much for all your hard work in connecting all the parties and having these valuable discussions. And with that, I fully agree with Pim, and this is an opening point, an opening session. And today we had a technical session also to take this forward. Thank you so much, and see you later.